Don't do it, guys. Don't place trades based on what you see here. Please consult your own financial advisors and do your own due diligence. All right, with that said, let's go. It is September 26th, Wednesday. Very interesting day today. Very, very, very interesting day. Well, number one, um, it's unfortunate, but hold on. There we go. It's unfortunate, but I lost some money in the market today. I am down like 200 bucks or something from yesterday, maybe even more on this account. And mainly because EXK went down a couple percent, my options climbed up, my put sells, um, and so I've just been I've been down a little bit. My obligations increased. As you can see, the rest of the everything is red. I don't understand why it's showing less price. There we go, percentage change. Um, Let me see here. All right, this is better. Okay, so as you can see, my puts have been rising for uranium. For even the Ford one went up. EXK calls went down. That means EXK is down. So it hasn't been all that great. As you can see, it's a sea of red out here. The only thing that's positive here is a market short ETF. The market went down late into the day. We're going to talk about that in a second. Um, C-SPAN somehow is up. SIG somehow is up. And but the rest, as you can see, everything is red. Even even Apple is red. Look at this. It's unbelievable. Apple red? What? They were praising them. I read some articles about how their iPhone Maxes are outselling everything on the market, including bread and rice. So they're the hottest commodity right now in the world. They're outselling the smaller version of phone, like 5 to 1 or some crazy figure like that. People are saying how the higher you price your phones, the more sales you're gonna get if you're Apple. That's how hot the brand is. So we'll see what happens. I do have, the 12 shares. I don't plan on buying any more for the time being. Now, having said that, like everything's down. China's just up just a tiny bit, but that's about it. Emerging market bonds. Speaking of bonds going up, check this out, guys. The Fed raised interest rates today by a little bit again. And so this is why we saw the late market sell-off here, and the interest rates for bonds went from 3.1 to 3.6, I believe right there right now, which is a big move. That's 40 basis points there. Basis point is just 100th of a percent. So markets sold off, and so what's happened is is flowing from the markets into bonds. So the yields of the bonds travel inversely of the price of the bonds. So they're bidding up the bonds. People want to lock in their rates because my speculation is that people are afraid that these higher market rates, higher interest rates, are going to eventually start pulling in on preventing from new loans from originating because the rates that people are going to have to pay is going to be higher. Then now, they're afraid that the housing might go down, everything that's debt related, which is pretty much everything in the US economy is debt related. Everything. Consumers buy on debt, housing is bought on debt, cars, everything is bought on debt, number one. Second of all, companies, um, every single company is in debt. They rely on their debt percentage. There's very few companies that don't have any debt, and those that do are reliant on other people being in debt in order to, their customers. So it's all tied in, man. But the single most important thing, and I think the focus right now is back on interest rates where it belongs instead of these trade silliness that is going on in the news. Is pretty much the only thing that matters here when it comes to actual movers, actual news. So we're gonna see how much these percent, how much these new rates influence the market historically. You know, it has sometimes it's gotten pretty ugly. So, 2001, 2008, at least for the things that I've been alive for and paying attention. So we'll see how it plays out this time around in a world where debt is everything, the interest rate is the price of everything. I'm not pulling these quotes from anyone, by the way. This is my original thoughts. But yeah, the interest rate is the price of credit, and thus, everything is run on credit. It's a huge thing. So, the short-term interest rate now is almost as high as the 10-year rate. People are going into bonds, and they're anticipating that they're going to get, the price of these bonds, the yield that people are collecting per year is starting to look more attractive than what they think they would get from the stock market. The one thing that people are ignoring though is inflation. They're looking back at 2001, 2008, and they're thinking, oh yeah, the dollar's gonna get a bit, so anything that pays you dollars in the future is just pure, pure profit, pure money. But if it was that easy to predict the market, all of us would be millionaires, you know? It's like, oh, we're at a really high place in the market. Um, we're going to, the interest rates are climbing up and we're super overvalued. Therefore, it's going to be just another 2001, another 2008, and here we go, 2018. Sounds easy enough, right? But, well, if that was how many people are expecting that right now? There's so much cash in the sidelines, right? This is the most likely scenario is people are always anticipating this dance between the bond and the market, but something else is going to surprise us. It never works out exactly how you thought it will. It never does. So we're gonna get hit with something from the side. Nobody knows what that is. So you gotta position yourself, appropriately. I don't do any stock recommendations, of course, because for many reasons. So I'm not gonna tell you what appropriately means. I'm just gonna share what I do, and we'll leave it at that. Now, what else has happened? Okay, that's the important stuff right here. We laid it out. What else has happened? I'm getting some dividends soon. I spent the money. Well, I didn't spend the money. I invested the money, or invested. I put the money to work, the 2K, with a couple of chemical put contracts, like yesterday. So I'm feeling good about all my money collecting premium. So that's all nice and groovy. What I'm not happy necessarily about is that chemical is down with the rest. I'm sorry, it's not down actually, but uranium, excuse me, is down with the rest of the market. Chemical is actually up on the day a tiny bit. And like I mentioned, as long as it's hovering around $10, I'm a happy camper, and it's all groovy. If that continues to occur, I'm gonna be making money on all this. I'm gonna collect all this premium if that happens, all of it. So I'm looking forward to that. Um, so silver and gold didn't take it, didn't take the news well. Gold dropped below 1200 again. Silver didn't have a great day either, down 1%. So right now they're just a tiny bit. 12 is hovering around 1200. It's proven to be a really critical level for gold. It's holding on at this level for such a long time now that whenever it breaks out to the downside or the upside, traders are gonna have something to say about it. It's gonna be a big move. Usually that's how it works. Now, not always, but usually it works like that, where um, if you have a long period of hanging out just one tiny price within a very short range, as soon as it breaks out of that range, everybody and their mother pile up on top of that trade, and it just makes it so explosive. It turns into like a little spike, and of course the spike eventually gets sold off, but it signifies a change of trend, and so it gives an opportunity once that spike corrects for people to actually um, buy in again and enjoy the ride with this long-term trend. Now we'll see if that actually plays out. It seems to happen the majority of the times. You can take a look at anything and see that that's how it plays out. So we'll see if that actually occurs. I was still waiting for that emerging market spike down. It's not happening as of right now. You could argue that it's a slow grind downwards. Like let's take a look at my emerging market fund here, the one. So it's still grinding down lower. I haven't seen a spike down. But if there is one, I'm gonna probably buy this fund like a couple more $1,000 in here because I really enjoyed the high dividend that it pays. And but don't buy it. You gotta understand it first. Trust me on this. Do not buy this fund. Like read the prospectus, do your research, get your advisor, get an advisor if you don't have one. I'm not an advisor. Don't listen to me. Don't do it. But I own this fund and I like the dividend because it's not really a dividend. Okay, it takes a percentage of the capital to fulfill the dividend, and they announce how much that is going to be based on factors. So just don't do it. All right, do me a favor. Just buy something else. A nice mixture of. Actually, I'm not going to tell you what to buy. Okay, so that's what I'm doing. So far, it hasn't been a great month. It hasn't been a great week. I've been down. Look at how it's trending downwards a little bit. Right, this is the weekend here, and now down, and then up like 50 bucks, now down again. So we'll see how the rest of the week. I'm hoping that the traders um come to some kind of a conclusion, right? The investors and traders come to a resolution as far as to what this rate hike means for everyone, what it means for the markets, for the economy, for everything, and they pick a direction because it's going to be really helpful for the rest of us to be able to make decisions based on what they decide, based on what the market makers decide, what the people with money decide. So it'll be interesting to follow that. We don't have the power to influence the market, so we have to ride on the decisions of those who do. That's just how it is. Whoever's got the money got the power. So, all right. I've talked a little bit about that. I talked about the rate hikes, talked about the precious metals, emerging markets, U.S. markets. I basically covered it. Apple, basically covered everything. All right. Well, if you got any questions or you want to say something about my comments, you can comment in my comment section, obviously, and let me know what you think. If you want me to cover something, I will. If you want my opinion on something, I will give it to you. If I don't write it down, I'll talk about it in the next video. Um, so let me know what you want to know. With that said, peace out.